Right, guys, we are looking at the weekly chart on Euro USD. Right, so we have set it on the 4-hour time frame. If you haven't got Trading View, I do highly recommend you actually grab it. Now, Trading View gives us a good indication of where the market's going using pre-history, right? So using the old candlesticks, we will find out exactly where the market's going. So we're going to forecast and we're going to set some parameters, and we're going to see exactly and predict basically where we feel Euro USD is actually going. Now, fundamentally, obviously, we've got to look at a few things. We've got to look at the actual US dollar index, which is classed as the DXY. So the US dollar index usually tells us how strong the dollar is going and how strength it's actually moving. So we can see the dollar index, they've been basically printing more and more money, more and more dollars, as you can see. And obviously, we are coming up to a point where I think it might break up to a slightly higher before we actually really see a downturn coming back down in terms of the dollar. Now, what does this mean? What does this mean for Euro USD? What this means is we are trading the euro against the dollar. So if the Federal Reserve is printing money and have going to consistently print money, we got to make sure we're on the right side of the market. Okay, so what have we been seeing? This is all working in correlation. We have been seeing a huge downwards trend, right, on Euro USD, a huge downwards trend which is occurring. And this actually started way back in, I believe it was early December, as we can see. So around last year, March, it's broke up, come a bit low. We thought it's done a double bottom here, but it's actually broken up and come really low. And the trend has just been ever since going. Higher highs, lower lows, higher highs, lower lows, higher highs, to a point we've actually got down to a serious double bottom on a 4-hour. So this is called a double bottom, guys, where you see two bottoms continuously. I feel the market has got a long push more to go down. And the reason why I feel that is because we are going into a recession, guys. Okay. Now, if the dollar index, if they continue printing money, which they do, and in order to slow down the rate of inflation, they have to continue printing more and more money. Now, if that continues happening, this is going to obviously ultimately bring Euro USD down to ultimate lows that we've never seen since a long time. So when we go back to the daily time frame, we've been in this area. Last bureau in this area was around 2017. Okay, March. So that's 5 years ago, guys, more than 5 years ago, 5 years and 4 months. We were actually in this area where price has been just now. Now, we've seen a huge wick rejections, if you want to call them. We've seen reversals. So, in my opinion, what's going to happen here now, and we're going to set the tone by actually putting in a few trend lines. So, what I'm going to predict, it's going to happen possibly over the course of the next 4 or 5 months. We're going to see Euro USD push higher, okay? It's going to push higher and it's going to grab more liquidity, okay? Now this candle here with a huge wick rejection from the upside here is a very key sign, a very, very key sign where market is very likely to return, okay? Now when it returns in that area, we can obviously see the actual market price moving down, okay? Obviously, it's not going to move accordingly to this. Well, it could potentially, but we never know. So we're going to try move this down and go to a lower low on Euro USD. So if we look on a weekly chart, we've actually have been there. So it's not like a no man's zone. Price has actually been there. So on a bigger time frame, We're looking at years now, potentially. We have actually been there in the past, right? So we're going to go back a bit more. Going to narrow the whole view for you to see if you can get the entire data in, okay? Nothing to panic about, guys. Just because we've been there doesn't mean we might not go there. It potentially does mean we could go there. So nothing to panic about. Remember, anticipation is everything, meaning if you expect things to happen and you know what they're about to happen, you can at least prepare, right? You can at least prepare, and that's the least you can do in this market. As well as controlling your risk, the least you can do is prepare. So coming back into it again, if that continues happening, we will break lower, potentially there, and then obviously the market will resume for a temporary period, just to get some retracements as it would normally do. And once it's got some retracements, then we can see the market really pushing down here. Okay. Now, if the market goes there, guys, okay, this will be the depression. This is the Great Depression, okay, which actually happened in 2000, right? And it went on for a couple of years. It doesn't just stay there and we just snap out of a depression. No, the depression kicks in after a huge recession. We had a 2007 recession, right? So this is the last one here. You with me? So if it kicks in, we can potentially be here for a few years, as you can see, right? From it was here since February 2000, right up to 2002 April. Okay, so we have actually been in there before. So when a recession actually happens, guys, we have to ultimately prepare ourselves for the worst. Okay, so yeah, again, these will be buy limits. These would be buy limits. I wouldn't be pushing any sales right now. Obviously, we are predicting this and it is a forecast, but I wouldn't really push any sales at the moment. Reason being is because the market can overturn and give us a nice long swing to the upside. So we want to be very cautious trading during these times, especially when we have a recession looming amongst us, as they say. I was going to say amongst us, but amongst us is it's just a little famous, a little funny quote we say in our WhatsApp group. Okay, so yeah, without too much detail, and obviously from that point, technical fundamentals, we're going right back up to the ultimate highs there. Again, guys, this could take years to happen. Okay, that's years. You with me? We're here. We're in 2022, right? I'm talking about the next year or two, right? This is what you could potentially be looking at. So that's my forecast on Euro USD. So what I'm going to do, I'm going to drop it down for into a 15-minute time frame for my day traders. Yeah, swing. No, I wouldn't say swing, Jeff. I would say it's more for day trade, especially if you're on the 15-minute charts. So when you're on the 15-minute charts, guys, you should be actually looking on two time frames, 15-minute and an hour at the most. Okay, remember, you're trading on a day basis. You're not holding it for weeks. You're just trading on the day basis. You're in and out the market. So if you want to be in and out of the market, get an overview of the market on an hour, and then drop it down to 15 minutes or 5 minutes for your entries and your exits. So this is Euro USD. For my day traders, we're just going to go straight into the live charts and check out the currency strength meter. Okay, the currency strength meter indicates, looking at the major pairs, by the way, Euro is quite strong. Well, it's pretty much the most strongest currency on the market right now compared to GBP, USD, and AUD and JPY, and the others. So knowing that, Euro is going to buy up USD, which means price, guys, is going to move upwards. Okay, so this is what's likely to happen. We're going to drop this down to the 15 minutes. Okay, so today is the 21st of June. So we're in a Tuesday. We don't trade on a Monday. So on a Tuesday, this is what we could potentially look at, guys. Okay, we're going to just do some 15-minute analysis. And the way we do that is no Fibonacci, No crazy indicators, just simple, straightforward support and resistance and key zones that we're going to pick up. Okay. Now, the reason why I draw these lines, these are your key zones. Okay. We're going to go through these key zones in a minute, but there's a reason why we've actually drawn these key zones here now. So I'm going to put one there. That's a key zone, and possibly lower there, and the higher highs. So we're only going to trade what we can see. Remember, only trade what you can see, not what you feel, because what you feel is always completely wrong. Okay, it's what you see, especially if you're an intraday trader. You only want to trade what you see. Okay, so as we can see in this zone here, price has been rejected a few times and it's come down. Rejected a few times, it's come down. Huge rejection here to the point where it broke this, done a break, retest, and it snapped right back down to lower lows. Okay, so now I've put my key areas. You could call these support and resistance. I call them key areas, key zones. I'm going to drop it down to a 5 minute, and they should correlate basically. Okay, so coming back down to the 5 minutes. Remember, when we're trading, it's good to know this point. This is a really, really, really important point actually. When we're trading, we are not looking to trade in the zone. Remember this. This is in the zone. So where we don't take trades, guys, is within the range, which is the zone. Okay? We will look to trade out of these zones. And these are your areas of entry. So for the tops here, you could be potentially looking at sells. For the bottoms here, you could be potentially looking at buys. Okay? So you should never be trading in the zone, because that's predicting, which is borderline gambling, right? Because you can't predict where price is going to go from here, whether it's going to go up or down. You with me? However, when you look on a 5 minute, 15 minute, you pick up these zones. Now, you don't trade in these zones, meaning you don't put any buys or sells in these zones. You put your buys, which at the bottom of the zone, or your sells above the zone. Okay, and that's how we trade, guys. Okay, so coming back to intraday trading, guys, if the market around what we've got another hour and a half before the US session opens. If the market opens and we get a lot of liquidity, we could potentially see a breakthrough. Now, a breakthrough would be breaking the higher and going up higher. So from this point, you could potentially be looking at sales, or you could be looking at buys. But quite frankly, I don't think it's going to really go up this high. Reason being is because the actual live chart's telling us that euro is strong right now. Obviously, the US market has not opened. So this reading here doesn't really mean anything. Okay, guys, this is kind of interesting point. This reading here, when the US market is not open, is incorrect. Okay, yes, that's analyzing the volume of dollar coming in through the indexes. However, this reading here, it's not a fully accurate reading. So in order to trade today, I would normally wait for the US market to actually open. We're going to have a quick look at the Forex factory. We can see there's nothing really major happening with the euro or the USD today, except for the Canadian dollar, where they got the CRS sales figures coming out. Tomorrow, or I believe we've got Powell speaking at some point, giving away there he is. He's coming in tomorrow, so that will shake up the markets. Again, you want to stay out of the markets if you're new to trading, because you get trapped basically with the volatility. So yeah, coming back to where we think Euro USD is going today, guys, it's not really rocket science. Please do not make trading complicated. It's either going to come down to the bottom here, and if it does come down to the bottom here, guys, we are looking for buys. If it's coming up to the top here, we'll be potentially looking for sales. Okay, and nothing more, nothing less. And that's your intraday setup. Simple as that, right? Simple as that. Just your intraday setup. So again, if this is coming back down here, potentially we could be looking at after 2:30, price could potentially have a retracement to the lower lows. Again, you would not potentially see a whole full side come down. You could potentially see it come in mid-range before it breaks up higher. On a bigger time frame, like I have said, guys, you should always look at a bigger time frame. We can see what's happening here. So again, these are the zones, and remember, we don't trade within the zone because you can't predict this up and down. Okay, we will trade out of the zone, so we'll be putting our buys here. Yeah, around here we'll be holding the sales, as you can see. So this is what a support and resistance helps you with, is your overall buy and sell zones where you should be entering. Okay, so this is really, really important. um so guys, I'm gonna pretty much call it a day now with Euro USD. If you've got any questions, throw them in the comments below. I'll be happy to help you. And have a great day trading. Remember, risk management, it's key, it's everything.